pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I'd like to call the Lamar City Council regular meeting for Tuesday, December 19, 2023 to order. We'll start with the roll call.
Goodchild?
Yes.
Donlin?
Here.
Wick?
Yes.
Sturgeon?
Yes.
Bruns?
Yep.
Motion to approve the agenda.
Second. We have a motion and a second. All those in favor say aye.
Aye.
Opposed? Motion carried. General discussion, citizens. Any citizens in the audience here to address the council? Seeing none, we'll move on to the Thumbs Up Award. Start with Mike Donlin.
I'd like to offer a thumbs up to the local group that has been working to advance the cause of daycare and childcare here in Lamars. They have managed to successfully complete a transaction that brings the opportunity to greatly expand and improve access to daycare here in the coming weeks and months. And the arrangements are going fine. Rich Zitlow is one of the key players involved in that, but many others representing organizations and daycare interested people. Thumbs up to all of them for the success they've had, and we can look forward to better access to daycare.
Thank you, Brian.
I'd like to give a thumbs up to the three gentlemen who received their oath of office this morning.
All right. Clark.
Thumbs up to Mike. Thanks for the last 4 years. We've sat on some committees together. We've agreed and we've disagreed. And things have worked out quite well. So appreciate your service.
One of us was always right.
I don't like to say that.
Ditto those sentiments, and I was planning to give a thumbs up to Mike and thank you for all that you've done. I know long before you got on council, you were in other leadership positions inside this community, and the amount of effort and knowledge that you shared, we really appreciate it, and we would not be here without you, so thank you.
I'll throw in a ditto on that as well, so thank you for your term, and working with you has been a pleasure. Also to the Galen Choirs and their Vesper service that I got to attend this last week. It was well presented, as it is every year, and they do an excellent job of what they present for the community.
Great. Mark?
Going last, you always have to just say, but that's those exact things. The folks that took the new office, oath of office, Mike, for your service, and I'd throw one out to Brad Pitt for coming in at the beginning of the year.
Yeah, absolutely. And I do want to add one more thumbs up to the EMTs this week. I heard that it's been a rough week, and you've had some great success and maybe some not, but thank you for what you do. So moving on to consent items. So inside the consent items, we have an approval of the December 5, 2023 regular meeting minutes, a list of bills for period ending 12/15/23, monthly financial statement for November 2023, designation of the official newspaper for 2024, appointment, and then we have commercial solid waste collection licenses, urban revitalization tax exemption request, and renewal of the liquor license for Habitué Uptown, Blue Tequila, Family Table, and a transfer of liquor license to the KCs.
I hate to always be that guy, but I think I said this last year, the designation of the official newspaper, I would appreciate if Mr. Wagner would put the space between Lee and Mars on the Mars. It's just kind of I'm a nitpicker when it comes to things like that, and you should get it right. That's all. Motion to approve consent items 1 through 8.
Second.
One question on item number 8. Is with Chief, everybody in good standing on those?
Yes.
In all areas? So we're
And
good?
the transfer one is when we go out to the fairgrounds and look that building over before they go out there every time, and everyone's good.
But everybody getting these is in good standing with the city?
Yes.
Thank you.
I believe we have a motion and a second. Any further discussion? Not? All those in favor say aye.
Aye.
Opposed? Motion carried. Moving on to action items. D1. Fiscal year ending 2023 annual financial report. Creative Planning, formerly known as Bergen KDV, has completed the annual financial audit for the city for the fiscal year ending 6/30/2023. A representative of Creative Planning will be at the meeting to discuss the report. Administration has reviewed the audit and recommends council acceptance.
That's me.
Hi, gentlemen.
Hi, my name is Dustin Opatz. I'm a manager with Bergen KDV. So the structure gets kind of wild. So Creative Planning technically owns Bergen KDV, but because of their structure, they are not allowed to perform audits. So Bergen KDV is issuing your audit report because we are the standalone audit firm of this giant entity. I don't know. It gets kind of wild, but that's essentially how it's structured. So yeah, Dustin Opatz, manager with Bergen KDV. Super excited to be here. I'll mostly be going through the PowerPoint that Joe printed out for you. Most of these charts, actually all of these charts and graphs can be found in that thinner document, that communication letter, and it'll have a lot of the things I'm about to go through. So if you're looking for that reference, that's there as well. If you have any questions during the presentation, feel free to stop me. I have such a passion for government finance and city finance that if nobody stops me, I'll just kind of blow through it. So yeah, feel free to stop me, otherwise we can catch any questions at the end. Okay, so the first couple slides go over the different reports that we issue. So the first and most important one being your independent auditor's report. So essentially what the city is paying us for is to issue an opinion on your financial statements. So we do issue an unmodified opinion, which is the best we're allowed to give as your auditors. It states everything is fairly presented in all material respects. As far as responsibilities, I always like to go through, it's your responsibility as management to prepare the trial balance, make sure the books are in good order for us. And then it's our responsibility as your auditors to come and audit those books, right? The next page goes over a couple other reports that we issue. So the government auditing standards report, because of the level of grant funding you receive, we're required to look a little bit closer at your compliance with laws, contracts, grant agreements, and related internal controls. And so we do have one material weakness, which is the highest level finding that we give, related to financial reporting and lack of segregation of accounting duties. So the city of Lamar's just doesn't quite have enough accounting staff to properly segregate all the duties. And so that's that piece of the finding. And then the financial reporting side is we do offer significant assistance with preparing some of those journal entries to get the financial statements materially correct. And so that's kind of the two parts of that finding. The next report that we issue is a single audit report. So because the city expends more than $750,000 of federal money, we're required to look a little bit closer at your compliance with specific federal programs. And so we had no findings related to that test work this year. The very last report that we issue is the Iowa Legal Compliance Report. So the Office of the State Auditor gives us a series of very specific checklists of state statutes that they would like us to check compliance with. Only one finding related to that test work, and that's related to deficit fund balance. The biggest deficit fund balance is in your TIF fund, and that's related to an interfund loan that previously wasn't recorded, and so we did do a prior period adjustment to restate beginning position to get that interfund loan recorded. And so that's something that is going to work, exactly like your other debt, where over a series of however many years, that's going to get paid off by the TIF fund as those collections come in and make those other funds whole. I wanted to point that out. There were a couple of other smaller funds in deficit, but that was the most significant. The next few slides go over the general fund. So starting with the general fund balance, so you did have a significant increase in fund balance this year. Most of that was driven by recording that interfund loan, because on the general fund side, it's a receivable, right? Because the TIF fund owes it money. And so that goes directly to fund balance. Yeah, that's right. So unassigned fund balance represents approximately 60% of your expenditures. So that means you could theoretically run 60% of the year without any additional dollars coming in, and you would still be able to fund operations. The next slide looks at the allocation. So we do this just to see if there's any significant fluctuations in your sources of revenue year over year. So the majority of your money comes from taxes, and then charges for services, and then some other sources. But that stayed relatively consistent year over year. The next slide looks at revenues on a 5-year picture. So your tax revenue did increase about $341,000 related to an increase in levy. Your licenses and permits decreased about 146,000 related to a decrease in building permit revenue. And then your miscellaneous revenue increased about 181,000 related to a large workers' comp refund, as well as significantly increased interest rates. So you're earning more money on your money than in years past. On the expenditure side, we do the exact same thing where we compare it by function year over year. And so nothing I really wanted to point out there was pretty consistent year over year. And then on the next slide, again on a 5-year picture. So overall, your expenditures increased about 823,000. 327,000 of that was in capital outlay related to some increased equipment purchases. Culture and rec increased about 146,000 related to increased programming. And then public safety expenditures increased to 121,000 just due to your annual cost of living adjustments for your folks. The next couple slides are going to cover your enterprise funds. So enterprise funds are different in that they are full accrual right from the jump, right? You record your capital assets, you record all your debt, or everything right on the face of the statement. And so this graph is just going to look a little bit different. So you'll see 4 separate lines on there, right? You have your revenues, your expenses, your income loss, and then your income loss without depreciation is that gray bar. And so the reason that we include both is that depreciation is a non-cash expense, right? So you're never writing a check for depreciation. It more represents your capital replacement cost. So when that water infrastructure ages in 30 years and has to be replaced, if you've been covering your depreciation for all 30 of those years, theoretically you should have them, it's just more, you should have that money in reserves ready to pay for that updated infrastructure cost. It more signifies, how likely are you to need to borrow to do major infrastructure costs. And so in all 5 years presented, both of those numbers are positive, with and without depreciation that the water fund has covered. And that number has actually grown, that income. And so expenses increased about 100,000 related to increased repair and maintenance, and then revenues were up by about 500,000 related to increased usage and connections. And obviously you're kind of at the mercy of some of your bigger industrial customers too, and what they do with their water sewer usage, but this year was an increase. The next slide looks at your sewer fund. So kind of the same story. All 5 years presented, that fund has covered its depreciation as well as its operating expenses, so that's great to see. Your revenues increased about 215,000 related to some increased usage, and then expenses were up by about 173,000 related to increased maintenance costs, as well as increased utility rates that you are paying. The final 2 slides look at your tax capacity, your levy, and your rates. So the first one looking at your tax rates, that number has stayed flat for the last 4 years, and on a 5-year picture has actually decreased for the city's portion of the levy. And then on the next slide, it actually looks at your tax levies and values. So even though your tax rate has stayed flat, your levy has increased just related to increased market property values. And so year over year, it increased about 4.4% or 273,000. But yeah, tax rate stayed flat. That was a lot, but that was all I had. The next slide is how you would get a hold of me. So I said that I work for Bergen KDV, but my email is creative planning, so just more to that complication, right? But that is how you would get a hold of me if you have any questions throughout the year. We're definitely here's a resource for you, so feel free to contact me anytime throughout the year with any questions or anything I can help you out with. But I'd be more than happy to take any questions.
Justin, on the general fund balance tracking, from 2019 to 2023.
Yep.
In 2023, we made the adjustment on the TIF transfer with that helped our general fund balance.
Yes.
Is that same transfer reflected in 2022, 2021? No. So we can, for comparative sake, we could take 2.3 million off of the 6.1 and compare it to the previous years.
Yeah, I know that interfund loan was split across a couple different funds. I think the general funds portion was like 1.7, but yes, you
Yeah.
can take the 1.7 off
Okay.
for comparative purposes. That's a good
Okay.
point.
So we're not quite at where we were in 2021, but we're significantly better off than we were in 2022, I would say.
Right.
Does Bergen do audits of other Iowa cities as well?
We're getting
or
close
we-
to 21.
Yeah, so we actually work with Sioux City. That's probably the closest big one here, but we probably work with maybe 20 to 25 Iowa cities.
Wow, wow. I can assume Iowa, or
It's
Mars
close,
was the
it's
most
close.
fun one to do.
You're the ice cream capital of the world, and I'm like the biggest foodie you've met in your entire life, so yes. We went to that
Do it.
ice cream parlor every single day.
Good for you.
But yeah,
So in your-
overall, the team was very great to work
So
with.
in your
we really
opinion,
appreciate it.
financially, the city's sitting great, excellent, fantastic, poor, you know what? Just, because you see multiple cities, you see
Sure.
multiple scenarios. How's Lamar sitting?
I mean, you do have 60% of unassigned dollars in your, in your general fund, which is great for cash flow. Every city kind of has to find that sweet spot for itself, where, and if you've got plans for some of that unassigned fund balance, where it's not gonna just sit there as a cushion for your cash flow, that's something that you kind of just have to know as a city. Your enterprise funds are covering depreciation and all its regular expenses, which is great to see. So theoretically, those funds should have to borrow less in the future when some of those bigger projects come up. Hopefully your reserves are just, sitting there waiting for those.
Better than Chicago.
Yeah, can you say that we're better than our neighbors?
I don't know if I'm gonna put that on the record.
Well, we could say it.
That's what I heard.
Any other questions of Dustin?
I don't think so.
Thank you very much.
Excellent. Well, thank you again to all of your finance staff. They were great to us, and we're really excited for the opportunity to work with the city.
Thank you.
Great, thank you.
Thank you.
I would make a motion accepting the City of Lamar's annual financial report for the year ended June 30, 2023.
We have a motion and a second. Any further discussion? Not all those in favor say aye.
Aye.
Opposed? Motion carries. Moving on to action item D2, solid waste collection agreement. Van Sanitation is requesting a per unit pickup rate increase per the current agreement. The 5-year collection agreement, which was executed on January 1, 2020, entitles Van Sanitation to raise the rate charged 2 times during the term of the agreement. The increase can only be by the cost of living for the preceding year. The increase would take effect January 1, 2024. Therefore, the cost of living increase would be 8.7%. Administration recommends council approve the increase per the current agreement. Van Sanitation has also notified the Plymouth County Solid Waste Agency that the contracted price to process recycling is increasing from $17 a ton to $30 a ton on 1/1/2024 and $40 a ton on 7/1/2024. This increase will cost the city approximately $17,500 a year. It is recommended that the staff evaluate and consider a possible rate increase in the near future. The $6.61 monthly per unit rate would increase to $7.18. This will result in approximately $2,000 monthly increase in cost to the city.
All right, 2 different things there. All that information in the recommendation is separate from their request to increase according to the agreement. So, but that's something we could talk about either today or in the future, because we'll still have to look at as the increases start. And then a little information here. So this is the second and last increase they can request under the current agreement. Their request that I got from Terry, and Terry's here also, if you want to speak with him. They requested, I think it was 5.1 or 5.2 in their initial letter that I got from Terry. But looking at it and discussing it, they based it off of the consumer price index for the urban users. And the agreement says specifically that we're supposed to use the cost of living adjustment. So they were using a different number. So even though it's higher, the 8.7 is the correct number that we're supposed to use. So just so you know that. Yeah. That's the information I have.
What term did the 8.7 come from? I mean, what years is, because this year it's not 8.7, but is it July to July or something like that?
No, everything I found was 8.7 for 2023.
Really?
Just looking at, I based it off of, because last year, we did it also. The increase happened January 1 of '23, and I think that was a 5.9, I believe. And that was the number Scott and I at the time found for cost of living adjustment for 2022. So using the same methodology, I got the 8.7. So to be fair, because Terry is new to it and the new owners are new to it also, so.
In my mind, I distinguish this cost of living thing to be a little different animal than what we use in a lot of our negotiations with, for pay and things like that. That market basket is a different collection of things that are monitored for cost.
Don't look at me.
I wish I had lunch.
Yeah, well, here's what I
think
found.
there's a fuel component and the cost of running a business kind of cost of living equated into this where I can understand why it's different and higher.
Yeah, that was brought up when we were doing the bargaining is cost of living doesn't account for everything. But what I did find is the cost of living does use the CPI, so the consumer price index. COLA does incorporate that in it, so COLA is probably a better number, realistic number than simply just the consumer index.
Yeah, because the CPI was 3 point something.
3.2.
Yeah,
3.2.
yeah.
So is their current contract end at the end of '24, and then we renegotiate? or is it
25.
25 was 25. At the end of '25.
A lot of money created out of nowhere.